Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis, which we'll get into in a moment. Tomorrow evening, I'll be going through the webinar entitled Identifying High Probability Trading Levels using the monthly and weekly candlesticks. That will be tomorrow's webinar. If you want to join me, just register your interest at our webinar page. Tonight, if everybody can read through the disclaimer, that would be great. Any questions to the chat box or the Q&A box? On our YouTube live stream, I can't see the chat, but you're more than welcome to watch, or I have given you the link to join us. You're more than welcome to join us and talk to me in the webinar. So everybody, please read through the disclaimer. All right, let's move along now. For those that don't know me, then my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities, and I'm a full-time Forex trader in trading in the Forex market now for just gone 20 years. Mentoring for more than 10. If you want to contact me, my email's on screen, duncan.cooper@acy.com. Through the week, you can connect with me on our website, which is acy.com. Go to the Market News tab, or our YouTube channel, which is at ACY Securities Australia. And if you want to connect with me personally, my Linktree page is there. You'll get my links on that handle. If you want to get access to the charts I'm using for MT4, just contact Nathan.bray. I'll put his details in the chat for those in the webinar. There we go. All right, so let's get into this week's analysis. Of course, we've just had President Trump re-elected. It's caused some volatility in the market. So I'm just going to go through the red items for the week. At forexfactory.com, time shown on my time, Queensland time. So we've obviously had the President Trump talking, getting elected. We've had the pound climate change already come in, which was slightly positive, better than expected. Okay, so 11:30 tonight, we have Canadian CPI data, or datas. So it'd be difficult trading a Canadian cross when we're waiting for inflation data coming out, but expecting that maybe just a slight dip or a further dip. Wednesday in the morning, 7:45 a.m. for New Zealand, got CPI QQ, so more inflation data coming out, this time from New Zealand. And into Thursday, 11:30 for Canada, core retail sales, retail sales, US unemployment claims. Then a big one for the week will be the Japanese BOJ policy rate. That's usually 1:30 my time, give or take, around that window. Potentially expecting that interest rates may get risen. And Steve is saying you can't see my Forex factory. Let me work things out. All right, should be able to see it now. But I'm just going to keep talking. For what you've missed, you can just head over to forexfactory.com, just going through the red items. But the big day off will be off Friday when we've got the Bank of Japan BOJ policy rate. Potentially, the rates may be rising here. That would be negative for pairs to the yen, because the yen will get stronger. So that being said, be very careful with the yen pairs this week. If you're not 100 pips up, I would say on a trade on the yen cross, they can definitely move more than 200 to 300 pips after this event. So no point being in a yen trade if you're only at 10 pips waiting for this item to come out. So usually it is 1:30 p.m. my time, give or take. Then into the evening, we have the flash manufacturing and flash services data for the following: Eurozone 6:15 p.m. for France, 6:30 p.m. Eurozone again for Germany. Then we have the UK version at 7:30. And then we have the US version at 12:45. Often the market can get very volatile on these releases. So Friday's going to be a very volatile day, I should imagine, because of the bodge and then these releases heading into the European and the New York session. So be aware of what's coming out. There isn't a great deal this week, but certainly busy on Friday. And of course, today we've got the Canadian inflation data there, okay? Now, as far as I can tell on the dollar index here, yesterday Trump came out and said they probably weren't going to put tariffs straight away. And then I did then hear some further commentary today that they're going to maybe immediately put tariffs in place for Canada and Mexico. So we had a move up. Pairs to US dollar moved up yesterday, and then they did move down a little bit through the course of Asian time. All right, so on dollar index here, and what I want to do is go to my other charts just to show you that we have on the day chart of dollar index some divergence here on the MACD, and we're seeing the opposite kind of divergent plays happening on some of the other pairs to the US dollar. So it's a little bit divergent, which is often a precursor to a change in trend. So to my weekly chart, I've been asking the question. It's a bit of an area of resistance over here where we had an imbalance on this movement down. And we're at the 62% retracement of this range, and also the extension of this range, 127 extension. So there's a confluence of things going on there to at least allow the market to have a pullback. Whether or not it's a major top or a minor top, we'll have to wait and see. But we are seeing a week down this week. The chart has actually come down on the index and put in the lower top, lower bottom. Now this may want to come back up and put in another lower top. All right. But nevertheless, hopefully you can see there we're getting a bit of a day chart shift in trend. And as I said, with the MACD, we are seeing some divergence. So we may be seeing, if you can get short, well, if you want to trade the index, get short. But if you want to do the opposite on pairs to the US dollar, if you can get long, as this is starting to move down, what if we came all the way back down to here now that Trump's in power? Is the dollar topping? And are we going to maybe see this unravel back to the downside? So if that was the case, you'd want to get in for a positional play early in the move to maximize the potential benefit. All right. So let's have a look at the euro dollar. It's going to be the inverse. So the day trend has moved to a higher top. It is moving back up to at the moment. If you go to the weekly chart. This area here, this is actually a monthly low from memory, monthly chart. There we go. We've gotten close to that level. So the big question will be on any rally that we're seeing, any upward move we're starting to see, can we get back above 104.48? All right, so I mean the weekly trend is remaining down, like the US dollar index weekly trend is remaining up, but we're having a week down. Here we're having a week up, so it's the inverse. And we are to a higher top here now. Some may say there's a bit of a higher bottom forming in this area here. But I think my primary level to watch this week would be seeing as we blew straight above it this week, this area over here to the left, 103.34. If I'm not already long, that would be an area which I would look at for the buyers to hold the market. So I think the immediate trend traders should be looking to get to the long side for our range here. 62% level overlaps with that 103.34 area. So 103.29 to 34. That would be the area that I would watch in a perfect world. Now, what I am seeing intraday today is, and I went through this, I'm actually going to go through this tomorrow, the importance of last week's highs, last month's highs, last week's lows, last month's lows. There's a last month's low in here at 103.42, and there's last week's high here at 103.54. Now you'll notice as I move to the 50-minute chart, that once we moved above last week's high yesterday, we came back to it here to carry on up. And the drop that we had in Asia held at last week's high, and here we're holding it at last week's high. So whilst I would prefer it to be a 62% retracement, it looks like the market is wanting to bid the euro dollar up at last week's high, 103.53, 103.53. So can you see your setup here to get long maybe from last week's high? All right. There is the possibility, my preferred level would be with the lower one of the market, because if we had an imbalance forming here, and there's still some of it remaining. So that may get filled, in which will pull back to the 62% level here. We'll have to wait and see. So you always have to make a judgment call about where you want to engage. We may not come all the way back down into this area, because it looks like the moment intraday that we are starting to maybe hold at last week's high. So I'm expecting still further movements up. I think we're at least going to see, let me just get rid of this fib. Whilst the weekly trend is down, we're at least probably going to see at least a 62 or 79% retracement on this range. 79% levels at 105.32. I'm more inclined to think if you can get long early in the piece here, that we could actually come all the way up within this range. And I've said this before, there's a number of imbalances. Well, there's two imbalances up here that may need to be filled, which would then logically allow price to come up to a 62% level or 79% level, or even come up, maybe back up to the 111 level. So if you can get in to the long side as the uptrend starts to form the day chart, if we start to move up and then continue up, if you get within the early part of the move, this is how you can create a good risk to reward if you're targeting up here, this imbalance or the higher imbalance. So, as I was saying, this is my preferred area, 103.34 down to 103.30. I may have had my fib drawn from there. It takes it down to 103.29. All right, Euro Yen. It's holding the downtrend like I discussed last week, but what I noticed, so from last week's education lesson, there's last month's positive monthly range. Positive kind of last month is the weekly trends mixed. It's higher bottom, lower top. Yesterday chart trend is lower tops and bottoms, but we're just trading down within the range of last month. So that's last month's low to high. And I noticed, as I was doing my analysis earlier, that we're just holding just above the 62% level. So if we further hit that area this week and reject, maybe we are going to be getting support down at the 62% level of last month's range. That's most definitely something to think about. The other side of the coin is the fact that the yen may be, the Bank of Japan may be raising interest rates. If they do, that's going to be negative. So at the moment, this is maybe still a seller's market, looking for lower top, bottom, lower top to form to come down to put in another lower bottom just maybe. So at the moment, we have just finished testing the 79% level here. That was the most optimum time to get in yesterday at 162.20. I think you could look at some form of rally maybe today, maybe back up to 162 would be great. 162 of this range would probably get you up to the 79% level. There you go, 79% level and 162 up there. So today, do we come up to then continue the move down? It will all depend how strong the euro dollar went. Euro dollar was very strong yesterday on the back of some of the presidential election info. And of course, the euro yen followed suit. So if we have the same kind of upward direction of the euro dollar today, then, you know, we could go to a fresh high today. So I wouldn't be just trading up here. I would want to see what price does when it gets to 162. Does it start to turn over? Then can you look to short it? Euro pound has moved from monthly support to monthly resistance at the moment. It is lower top, lower bottom on the monthly. Weekly's turned up because of that monthly rally, but of that monthly range here, 162 point. So I would start to focus on this weekly high here. I would focus on the monthly low here, 84.92, and the weekly high. Which one starts to hold as resistance? Which one do you maybe start to see failure at? To get short. So there's some wicks happening on the day chart here. There's highs to the left here as well. So I would maybe at the moment be watching. We've been to 62 level. I would start to watch 84.47 and just watch to see if you can start to see your setup to get short. All right, if we break a 4-hour low, come below here, look for the next rally to short. As well, if we break below 84.47, look to 84.47 to be resistance to go short. So it just needs to turn over, and then can you sell a rally, I think, in that area. Excuse me. All right, pound dollar. This low here is still acting as resistance. It did last week for the high, and whilst we closed above it yesterday, this is the weekly chart, but on the day chart we closed above, we are back below it today. So the weekly trend is down. The question is, we are very low down within this whole move here. Will the buyers come in and want to prop it up? So last week we held at this monthly low, 122.99. And whilst the day structure turned to up now, higher top, higher bottom, we're not able to hold above there. We did close above it yesterday, but we're not able to maintain above there with too much figure at the moment. But like we're saying on the euro dollar, there's a number of imbalances that may need to be filled over time. We may be wanting to come back up within this range, especially if the US dollars put in some kind of top. And as we move to the 4-hour chart, we obviously had a very sharp move up yesterday. So the 4-hour low is here. 4-hour structure's up, day chart structure's up. This is just correcting the upward move of yesterday, 62% level. There's 4-hour support here, 122.27, 122.30, 62% level. I'd watch there. Could come down to 122, 2 levels to watch. 122 would be back down to fill the imbalance. This imbalance here. All right. Very similar to the euro dollar. It's got this kind of triple bottom intraday area maybe forming. Held there. False broke here through Asia, and here we're just a little bit below at the moment, but we're holding at the Asia low. So if you do see, we could draw, I'd like a tighter trend line, but if we get a trend line break, I need to be able to put a tighter one in later in the day. If we break that trend line, that may well be suggesting that we're putting a bit of an intraday triple bottom in there. Watch the euro dollar, because if the euro dollar triple bottoms, so 1, 2, 3 here, the pound will probably do the same. All right, so both are looking similar. Are we putting in some for base here, especially here on last week's high, to put in the low of the day to move up? All right, pound yen. Now, same commentary as I was saying on the euro yen. If you go to the monthly chart, we had a very positive month last month, and we traded back down within the range of last month. The weekly is higher bottom, lower top, so it's mixed. And the daily's been trending down. We're getting back down to support over here, closer support here, and we pull back. That's last month's range. to 79% area of last month's range. So often 79% of last month's range can be the low of this month for that to move up. So if we were to further test 190.40, you may see on the 4-hour chart here some form of head and shoulder pattern form. 4-hour structure's turned up. 79% level would be great for an inverted head and shoulder, left shoulder forming there. All right, so we're putting the bottom in at the monthly range 79% retracement there to maybe move back up the range. That obviously moved up yesterday in line with the strong pound dollar. So if we see further strong movement of the pound dollar, we may see the pound yen move up. And then, of course, if these yen pairs continue to move up strongly in line with their the pound dollar and the euro dollar, just be very aware of what's happening on Friday then when the BOJ announcement comes out, because they could then go the opposite way if they've been moving up all week. Aussie yen, very range bounds. Last week I said try to stick to the outskirts. We haven't been to the outskirts yet. There's support at 95.51. There's resistance at 98.72. It's right in the, it's kind of sitting in the middle there, which isn't that attractive. Just want to see where it is relative to last month. So we've actually put a new high in for this month to last month. So what we are actually doing daily is we pull back to 79. So we broke the high of last month, then we retraced back inside the range of last month. So I've dragged the fib up to the new high of this month, and the 79% down there, 96.29 is acting as support. Bit like that pound yen. Could be watching, depending on what the market wants to do. A little bit similar like the pound yen. Now, are we going to see some form of left shoulder, an inverted head? Could that come down to 79% level here? 96.42, that area over there is at 96.37. Will we see some sort of pattern like that? At the moment, as I'm talking, it's having a bullish 4-hour candle, so maybe it can't get down there, but will it form that pattern? Now, I re-longed the Aussie, if that's a proper terminology. At the start of the year, I got long at 62 and stopped out at 62. And I've been discussing on the weekly or even the monthly support here. But the range looks nice on the weekly. Bottom of the range here, can we move up to the top of the range up here? Big question is going to be this weekly area, 2 weekly lows here. And that is the final low is actually a monthly low. It's been held there at the moment. That could be resistance to go short if you have a sell bias. For me, I've gotten long at 62. The idea that we're moving up to the top. So my bias is to the upside. And we have a higher bottom, higher top now. 61.70 monthly level became support for the higher bottom. And we're having a dip today on the 4-hour, 62% retracement here. We came down on the 15-minute chart to fill the imbalance over here. And this looks like it's just starting maybe. If we get a close above the trend line, maybe we're starting to bottom here to move back up for the day. Maybe we at least want to come up and fill this imbalance here and then come up to test the high of yesterday. So yeah, we get an imbalance, impulsive move up, we come back down to fill the imbalance. That was really the best area to be a buyer, 62 level overlap with the imbalance. And then of course it's been a little bit sideways here, but this may be just starting to find some support through London here to head back up. And if that's starting to move up, I'm envisaging that the euro dollar It's maybe bottoming here. Pound dollar. It's at least holding. Not quite as strong as a euro dollar. And it looks like the Aussie's kind of leading at the moment. All right, so I'm bullish Aussie, but of course, if you're bearish Aussie, 62.70 and 62.85 up here, weekly lows that were support are acting as resistance at the moment. Now, I did say to you last week, if we started to see more support coming in at 61.70, I said watch 62 to be support. What did it do yesterday? Before that impulsive move, it came back above, came from 61.70, came back above 62, back above, got support, and off it went. Today we can't get down there, so it's looking like 62. If we do retest 62 this week, that could well be strong support. So we're starting to prove support down there. And would not surprise me to see at least a move back up. If we start to get a nice trend forming here, we'll probably move back up to 68, because 68 has been a very hard area to live above over the last 2 years. So that's really where resistance is. So if we're getting support at 62, we could well be moving up to 68 as a target. All right, New Zealand yen. That's how I drew it out on my daily chart. Don't know if anybody went long down here at 86.71, but that remains support at the moment. We may revisit that through the week, especially when the BOJ comes out on Friday. But at the moment, once we broke below this consolidation, we formed a new consolidation area. So trade the boundaries. There's support, 86.71. If you got long down there, you should be targeting up here at 90.09. And then if price holds there, trade back down. At the moment, it's very consolidatory. You got to understand what it's doing. Where's the boundaries, and trade at the bottom and the top of the boundaries. Right, New Zealand dollar. Couldn't quite get down to the, this is kind of the Aussie dollar low within its range. We didn't quite get down there. And the day chart, structure's turned up. Higher bottom, higher top. Still a bit consolidatory here, but we've turned to up on the daily and the 4 hour now. Couldn't get to 62%. Couldn't get down to 56.07, the daily support over here. 15. Didn't come down as sharply. So the buys came in sooner than it did on the Aussie, because the Aussie filled the imbalance. So looking similar to the pound dollar, euro dollar, maybe a 1, 2, 3 triple bottom kind of forming here. Watch a trend line break to the upside for a further move up. All right, most immediate trends at the moment are up now on the New Zealand dollar. Yes, the weekly trends remains down, but the daily and the 4 hour trends are up. And the break of that trend line is going to, the intraday trend is going to turn back to up if we break that trend line. But the most immediate daily and 4 hour trends are most definitely up. Dollar Canadian, I said last week, watch 144.67 to be strong resistance. We're very high up here. We have actually gone to a new high on the monthly scale, but we are very high up. When I say very high up, because of the previous range and pullback. Something like the 162 extension, of the last up, pullback, move up. So for me, this is just that this is that nosebleed territory. It's too high up for me. You can see it's very choppy. Buyers and sellers are finding out as to whether we can top out up there. So the weekly high here is being very difficult. I need to knock my mic over there. So we have CPI data coming out later today. Another spike up to 144.67 and failure today. Most definitely would be the selling level to try and trade at. Buying up at such high levels to me just looks like suicide. So I can't buy up here. I can only look for the opportunity to sell. And I would wait for the CPI data to come out and see whether or not you can get a retest up here, another retest and failure up here. Can't really draw my fib because that's a higher top, but it'd be interesting. I'm going to draw it from there to their reverse. And of that range that's formed, there is a 79% level there, but that's not the true way to draw it. But what I kind of like is there's this area of resistance here. That could be a left shoulder head. This is not textbook at all, but its folks broke that high. If we came back up to retest 144.84, so 144.67 to 84 there, that area there. If we get another poke into there today and a failure, that would be a very good level to sell at, I think. It's failed there now 1, 2, 3, 4 times. Will it give you a final failure that you could trade at? Dollar franc weekly, top, lower top, potentially another lower top here. It's rather consolidatory, but are we at the top of the consolidation? Daily chart, let's put in the lower top to a lower bottom. I would now go to the 4-hour chart, go to that range, look for a retracement to the 79% area, even to come back up to these highs. Look to this area as the seller's level to continue down. All right. So that 79% level is at 91.30. All right, so dollar yen, as I've been saying over the last start of the year, are we failing at this major 79% level? On the monthly chart, we did put in a lower bottom just, then we rushed all the way back up. Weekly is having 2 weeks down. Getting back to my MACD charts, dollar yen, showing some divergence here to this final spike up here. So a bit of a topping out process. I would monitor this week, this range, to see if we could come back up to here. Lines up with the 79%, with the new 79% level. So it's actually 2 ranges. There's that larger range, and as we're discussing in last week's education webinar, that's the range of last week. Just false broke the low last week. So there's a 157.45, 79% level there. There's the major one at 157.15. And of the bigger range, this whole area up here, 157.15 to 157. That's quite a large range. 150. Oh, it's almost 158 up there. But we could get very volatile. There is a imbalance in this area here that may need to be filled. But if we got volatile on Friday and got all the way back up to resistance where we've been failing, last month's high is here, that would be a good area to watch for a final rally for a good shorting opportunity. All depends what the bodge does on Friday. And if they do raise interest rates, we won't be back up there at 158.07 because things will drop immediately. I think we're going to get up there. The market's probably preempting a little bit that the interest rates are going up. So if we don't get an interest rate rise, we will go up. So I wouldn't want to just short up there then if that's the case, because then the market, this movement down is probably being anticipating the interest rate rise. If we don't get it, we'll probably come up to at least test this high up here. But of course, you can still watch up here for failure over 24 hours, but I wouldn't just set an order up there to sell in the face of the bodge report on Friday. Now, S&P 500, which I haven't gone through yet, it really, if you go to the monthly charts, we just had a month down. Now, we are very high up. But the monthly trend remains up, and we're back above this weekly high here. And of the big swings, bottom here, top, looks like a 79% retracement of that range. See how it held at the 79% level. So it's very rangy. The markets could stay range bound as it reacts to the next Trump release. You know, what is he going to be doing over the next month? How is that potentially going to affect inflation? What will that mean for the FOMC or the Federal Reserve? So this could be rather range bound. And if I was doing anything on this, I would probably want to look for a dip because it's structurally back into an uptrend. So I would, you know, if this could move back down to 58.81, which is weekly support here, that would be a level that I could entertain. I'm not going to buy at resistance and highs. That doesn't make any sense. It's great if you bought down here, you could just be holding your trade to see whether it will break. But that isn't where you want to buy in here. You want to buy a dip. So you have to allow the market to offer that setup or not. In my mind, that's very high up now in the most immediate move. Okay, what would be the area to watch? 58.81, 62% levels at 58.70. All right, just finishing on gold, which has gotten bullish again. We all know the monthly trends. It's just looking like it's had 1 month down and now it's just carrying on. It's just at the moment being held at weekly resistance, but higher bottom, that actually has broken that high. So that is a higher top there. It's just struggling to clear that at the moment. It's a difficult spot to just go and get long because you're getting back up to all-time highs at the moment. Of course, down here on weekly support would have been the best area to start to manufacture your trade or get cluey. Since we got support down at weekly support, we've been going higher bottom, higher top, higher bottom, higher top, another higher bottom, higher top, another higher bottom forming here. So, really for the buyers now, you want to see weekly resistance, 27, 21 cleared nicely, and this area pull back to be support, this whole area here. Because we could hold here at the moment, trade back to here. So depending on your philosophy of gold, of course, gold's in an uptrend, but it could stay range bound as the market waits to see what Trump's doing. The market may not want to trade beyond that level at the moment. So you could be looking to a lower time frame, seeing if you can execute your trade setup for a short at around 67.21 failure to trade back down to support. If you're more on the long side, you have to wait for resistance to break and then become support, okay? So high time frame trends remain up. It's looking like we just had 1 month down and then we're continuing up. But just where it is at the moment is not the ideal position just to buy. You'd need your setup to form to be a buyer. Don't be buying into resistance. All right, so if I've learned anything this week, the market's a bit volatile from Trump just coming in. It does seem, if I go to my charts with my MACD on, that a number of pairs that have the US dollar in them. Dollar index, there's negative divergence here. We've got lower top, lower bottom forming the dollar index. Euro dollar, there's positive divergence here. We've moved up to a higher top Pound dollar is trying to cross up here at the moment. We don't actually have any, this area here, which is this movement down here. There's no negative divergence there, but that may be getting ready to cross. The Aussie most definitely has shown positive divergence here. The New Zealand has as well. So you can see dollar index showing divergence to the downside, lots of pairs showing divergence to the upside. The only one that isn't is the pound dollar at the moment. But, you know, euro dollar. So big question at the moment is, after yesterday's very impulsive move up, all right, so the pound is just coming down towards the 62 level. Euros coming down towards the 62 level. So we may get the imbalances filled in today from yesterday. And then the question will be, will support come in from the starting point of yesterday's impulsive move? All right, so I'm getting a close above that trend line yet on the Aussie. And let me say on the New Zealand. So still not quite finding an intraday base at the moment, but I'm still going to the long side if I can see a setup to get long. As I said, on the Aussie, I did get long the Aussie at 62. 62, as I said before, could be a good level for the Aussie once more today. If we were to get down to 62, we might just see a bit of a flush of this area. So a spike below this area. So if we were to come down and spike and then close back above 62, I'd then expect 62 to be support to come back up. All right, so that's my thoughts on the market at the moment. I think unless Trump comes out with something today to switch that dollar reversal, then I think we're maybe just moving back within the ranges of yesterday, and then do we find support to further move up? Our day charts are definitely turning up versus the US dollar. So, but nothing goes up in a straight line. So I was hoping when I woke up this morning and I saw price up here, that price was just going to continue up today. But then, of course, this was a bit of a Trump speech, knocked it down. And we may, you know, see a lot of whipsawing over the next week or two. All right, so just be careful. Try and trade the more outskirts of the market. So when I say the outskirts here on the Aussie, you know, this starting point is a much better area where we got support there in Asia today. Down here would be a much better area to trade. Stay on the sidelines. Try to be a buyer if you want to trade with the day chart trend at as discount price as you can. This is more discount here than it is in this area here. Now, may mean you miss out sometimes because you're waiting for the extreme discount area, but this is extreme discount based on where we explosively moved up yesterday. All right, I'm going to leave it at that. If you want to join me tomorrow, webinar links at the top there. Tomorrow I'll be going through identifying high probability trading levels using the monthly and weekly candlesticks. If you want to join for that, just register your interest. I look forward to seeing you then. Other than that, have a great trading day. Be aware of the, don't forget Friday, the Bank of Japan news coming out. So the most news this week coming out will be on Friday. It's a bit lean in between. Other than, of course, Trump can come out and say anything at any given time at the moment as he's signing off, rolling back things that the previous presidency put in place. He's now, of course, winding all that back this week, signing things. So I'm sure he'll come out with some more statements that could drive the market. So, you know, if you're not seeing your perfect setup, you don't need to do anything, but it could be a little bit volatile this week with Trump, and you don't have to trade if it's uncertain for you. You can wait for the market to settle down, but it is looking like maybe that dollar index has put in a short-term top, which means pairs to the US dollar potentially put in a short-term bottom. Okay. All right, I'll wrap it up there. As I say, if you want to join me tomorrow, just register your interest at the webinar page. And I'll look forward to seeing you then.